Welcome everyone. It's 7 o'clock. Let's get started and welcome. Actually, I want to start with a couplet from Tamil, and this is actually, let me read it in Tamil and then give you the meaning in English. அரண் ஈனும் இன்பமும் ஈனும் திறன் அறிந்து தீதின்றி வந்த பொருள் சேர்க்கும் திறம் அறிந்து தீமை ஒன்றும் இல்லாமல் சேர்க்கப்பட்டு வந்த பொருள் ஒருவனுக்கு அறத்தையும் கொடுக்கும் இன்பத்தையும் கொடுக்கும். Wealth acquired through fair means brings virtue and happiness. Of course, the money what we earn and we also invest for a double-digit return that is going to also bring happiness to us as well as to our family. This couplets, it has been after Bible, this Tirukural has been translated into more than 80 languages. And with that, we'll get started. And Team Velu has been promoting a lot of different multifamily industrial warehouse and also Nanban funds, hedge fund as well recently. And we have been able to raise over $12 million in the less than 2 years. And we also launched a portal, teamvelu.invportal.com. And probably you may have heard about it. Otherwise, we will be giving you that link as well. So Sasta Realty Capital is started by Team Velu with myself as manager to co-sponsor real estate deals, mainly multifamily, that are of value to the investors. So I find the partners, I develop the relationship, I analyze the deal and get into the partnership which are going to be beneficial. And I'll be a general partner, and also most of the times I will be there in the team to be able to continuously be updated and monitor for you guys. And also I will be taking care of the investor relations until the end of the project. And on all the projects, I invest my own money, and I also stand by my investors for all their questions and educate the new investors as well. And next one is the disclaimer. The information contained in this presentation is considered confidential, and it is intended solely for the individuals to whom it is delivered. The circulation of this document or disclosure of its contents to any other property is expressly prohibited. The information is solely for the use of prospective investors to determine the level of interest in loss produce. Actually, in this, it is not loss produce. In this Nanban investments. While the information contained in this presentation has been compiled from sources we believe to be reliable, neither of the sponsors or their representatives make any representations or warranties as to the accuracy or completeness contained herein. All financial information and projections are provided for reference only and are based on assumptions relating to the general economy, market conditions, and other factors beyond our control. All references to acreage, square footage, and other measurements are approximations and must be independently verified. Prospective investors are encouraged to conduct their own independent due diligence investigation, review financial projections, and consult with their legal, tax, and other professional advisors before making an investment decision. Basically, it is also a disclaimer that I have to have a prior relationship with the investors for me to be able to accept. So in case if somebody is trying to invest and if I don't know them, I need to meet with them prior to accepting their application for investment. So with that said, I apologize for a small mistake about the property name. And myself, Raman Velu, and I was a top producing realtor and broker from Keller Williams. And I'm a life coach and a real estate entrepreneur. And I also consult with a lot of people for how to invest in real estate and how they can really plan towards their retirement using their investments and become financially independent quicker, and also create a horizontal income stream so that they take the money out of the way for them to live the fullest life possible. And that is what I have done to myself, and that's what I share that story with others as well. 15 years of real estate investment experience, and basically when I wanted to become financially independent, I started investing in real estate in 2005, 2006. And since then, I have been growing in real estate. And 2014, I became a full-time realtor. And right now, probably I am co-sponsoring more than 8 deals. And passively, I've invested in more than 2,500 units. And I have co-sponsored more than 6+ multifamily deals, and also an industrial warehousing investment fund. And my websites are meetwithvelu.com, teamvelu.com, and STF Nonprofit is a nonprofit site. And I'm also developing another one called fulfilledlifefoundation.com as well. And that is about myself. And the Nanban Realty Fund, they have a plan to go for about $100 million, and their first property was the Laurelwood and Houston, that is closing in April first week, and it has been fully subscribed actually. And my investors, those who have already invested in that, their money is going to be sent to that, and that is going to be accepted. And one of the other things I would like to say is in today's this thing, the Austin property, the student housing, when you invest for this, it is going to go into a pool that is a fund where it is going to include this property and Austin property and one more property, which is going to be about $100 million worth. And so the returns are going to be averaged. And if you all can, if some of you, if you are really motivated, and if you can send the money by tomorrow, and if it hits my bank account by Monday, then your effective date will be April 1st. Otherwise, it is going to be at the closing of this Austin property, that is going to be around May 15th. Now, I would like to invite Suresh to be able to talk about what is Nanban ecosystem, what do they stand for, and why do we invest with them and all that. Suresh, would you like to go?
Yeah, thank you, Velu. I mean, it's pleasure coming here and talking to your investors, Velu. Again, thank you, everyone. Thanks for taking the time to attend this webinar, actually on a Friday evening. It's really a wonderful opportunity for us actually to partner with Velu. As you have just heard, that actually it's not just about money making. The Nanban also philosophy is about, again, it's a byproduct of serving others and everything. Therefore, our philosophies also align. Therefore, it's actually no better place for us also to partner with wonderful actually team. And coming to the as Velu mentioned, right now this is basically a fund. The plan is actually to this year, as a Nanban Reality is the first fund of this style that we launched this year. And we are going to be acquiring our first property, which is actually Woodlands MSA, which is actually really upscale community in Houston up north. And that's already been fully subscribed, in the sense we already got the funds that is required to go and close the property. Because it is actually a fund, the subscriptions will continue to go on. Therefore, the next property that we are lined up is actually a student housing in Houston, and then we will do that. And coming to the recent acquisition, our recent acquisition was Viridian. In December, we closed. That was in Plano, really a sought after property. You know, if you're from Dallas, you know how Plano area is right at the intersection of the two busy toll roads, and properties performing exceptionally well. As you know, typically the first distribution, usually of all, even in the past that we have done too, usually about 6 months time frame, the property is actually holding up well. In fact, next week we are going to be making our first distribution after the first quarter. Therefore, we are really very blessed to have such a wonderful property management company who are helping us, who are also on the our advisory board. And looking at the other properties that we own, overall about 150 million acquisition in the last 18 months. And here we are actually going to be closing about another 80 million, almost 90 million property acquisitions in the next 2 months.
Okay. So fund details.
And this is about fund. I think Velu already mentioned the fund is actually we are planning to acquire properties worth at least about 100 million this year. And again, this fund is going to be open for just this 1 year. During this 1 year, we are going to acquire three, maybe four properties in this year. The first two properties are already there, and then we may acquire one more, and then we close this fund. But those whoever invest any time point of time during the whole entire year, they're going to be the equity partners of all the properties under the fund, because everyone is investing into a fund, and the fund is the one actually holding all the properties and everything. Therefore, the minimum investment is actually 50,000. It's again a 5-year hold period. Typically, we expect it to be like about 3 to 5 years. That's what we say, 5 years. And again, during the 5-year hold period, as we exit any of the properties based on once they meet our exit criteria, therefore, which we are going to distribute to all the investors based on their contribution. And it also carries 8% preferred. You may also know what a preferred means. The first 8% of the cash flow from operations and everything will go to the investors. That means before we give it to the 8% investors, the GPs, the general partners, will not get anything. Anything over is going to be 75 to 25 split. And overall projection is going to be based on investor investments 18 to 24% average annualized returns that we expect. And the quarterly cash flow, that 8% or 8 to 10% is going to be quarterly. And again, since it is a fund option, you all know this, any real estate is usually not a liquid investment, it's mostly illiquid. But we do understand sometimes maybe various reasons that you may want to get the investment for any reasons. We usually allow after 24 months. Typically, either you can find somebody who can take over your equity position, or sometimes there may be a possibility that we also have some investors who may show interest as well. Depending on that, we can help you also do that as well. And as we mentioned, actually, it's going to be like a fund. As we exit from this fund, we'll also continue to have more funds. Therefore, we also allow 1031 exchange rollovers as well. And again, every real estate has a tax benefits. And again, not to mention about multifamily has a bonus depreciation. And the last property that we closed, we are giving the investors are getting 81% first year depreciation. Actually, it's very healthy bonus depreciation. But again, who can take advantage of that one is going to be dependent on your personal situation. Therefore, you may want to consult your CPA to see how you can qualify for that.
Sure, Suresh. Thank you. Actually, the investment and return class, the last point, if you are investing directly less than $500,000, and while Sasta Investment Capital is going to invest more than $1 million, there is going to be a clear 4% difference in returns given by, passed on by the Nanban investments. And they are pretty successful, as you can see, and we are expecting them to do even better. And out of that 4% per year, we are planning to pass on 1.6% to the advantage to the investors, which means you will get, like, say, if Sasta Investment Capital is getting 24, you will get 21.6, while the individual investors directly going there may get about 20%. Right, so that is the difference we are going to see. And the next one is about the catch up, right? So basically the first 8% is going to be given to the investors, and only if there is something left, then the general partners will pick up from there and then catch it up. So this is an example of that. So when there is only $7,000 of return is there for $100,000, nothing goes into the general partners. And so that is an example. That's after that, fund details. Suresh, please go ahead.
Yeah, therefore, I mean, this is a fund that obviously we will continue to focus on multifamily core plus and value add properties. Again, we have a very stringent criteria of evaluating and qualifying the properties that we want to acquire. Therefore, they need to meet a certain cash flow and as well as overall returns. That's when we go and acquire. Again, we have built a really strategic relationship. In fact, the Laurelwood property was exclusively offered to us because Newmark, actually, we have a very good relationship, and also we have a direct relationship even with American Landmark and C3, other institutional investors as well. Therefore, we have that relationship, we have the advantage. That's how we are able to get these properties under our belt. The term, as I mentioned, is actually 5 years. I mean, as in the previous slide, as we mentioned, like benefits actually bonus depreciation, and the projected returns are 18 to 24 hours, the 24%. That means in 5 years is almost a 2x. That's what it is. And it's going to be quarterly paid distributions, and it's going to be 1.5% of any management fee. And then again, you can also roll over as well. Sorry. And again,
yeah,
main objectives is actually the rule of thumb is actually preserving the capital, right? Therefore, we take a very pride in evaluating the assets to make sure the investor's capital is preserved. Also, achieving the consistent, predictable returns. That's what we always do it. And also not just only in the reality-wise under the non-burn, the philosophy of basically serving our non-burns, helping the non-burns realize their financial retirement freedom and everything. As a part of that, we are offering many things. Under that actual reality also, we follow the same thing. Always we strive for superior returns. And in fact, I just wanted to highlight in the previous slide, actually, as Velu was showing the total overall cash flow, overall distributions and everything. I want to give an example. Let's say a property makes 100% overall return, of which 40% is actually going to the investors straight because it's the 5 years, 8%. And the remaining excess 60% is going to be distributed based on 75-15. Therefore, is again that 85% goes to the investors and 15%. Also, that value is actually bringing in more than $1 million. The overall split also improves even further superior, which is 80 to 20% of the excess funds, which totally makes about 88%, it's almost 90%. We give it back to the investors. Therefore, that's what we believe in. We want to help the non-burns. Yeah.
So thank you, Suresh. Actually, I forgot to introduce Suresh properly. Apologize. Suresh is representing Nanban Group, and he is one of the lead partners over there. And he has been with them for quite some time before even joining, merging their company with Nanban. And so that is how they brought so much of experience. And at another point, he will introduce himself a little bit more as well. So
And go ahead, Velu, actually, let's talk about this. Yeah.
Yeah. So you can say about yourself and also why invest in Nanban Realty Fund. Yeah.
Yeah. I mean, again, I'm actually I live in Houston. Again, I have over almost 15 years of real estate overall experience assets, and the multifamily specifically about 5 to 7 years. I have invested over 1,800 units as a passively. Also, we have over close to 1,000 units as a syndication. Or in fact, almost 1,100 as a sponsor, a co-sponsor. And of course, as we speak about, we are going to be closing another 650 stuff as well. And yeah, and you want to talk about the charity piece of the non-burn, Velu?
Yeah, I can. Basically, Nanban has grown, guys, in the last 1 year as a $1 billion company, and they have a huge organization. Like there are several wings actually, and one is the stock market, and of course that is a huge one, hedge fund. and their charity is pretty big, and their real estate is growing pretty big. So they want to really help our community, and that's why we are partnering with them. And definitely, you would have heard about their trainings where they teach the strategy, level 1 and level 2 strategies for people to do their option trading by themselves as well. So we are really, really proud and thankful to Nanban for all their support for us to partner with them as well.
Thank you. And I highly encourage everyone to go and check it out, Nanban Foundation. We have several charitable projects that we are doing. And in fact, one of them actually is, in fact, one of the founders is actually in India right now for about next another 2 to 2.5 months, actually on a huge project that we take really pride, which is helping the farmers in India. As you know, farmers have a lot more challenges, and therefore we are helping them in transitioning from uh, chemical farming into a organic farming. In the process, we want to handhold them and teach them the processes and everything what it needs to. And typically it's about a 3-year project. Usually you cannot do anything because you need to prepare the soil and the land and everything. Even during that time, we are going to take care of their family expenses and everything. Therefore, those are the things that actually really that I myself actually I was moved before getting into a part. Now, of course, as a part of the Nanban family, we are really blessed to be that. Therefore, whatever you invest and everything, part of that is also going into those charitable projects and everything as well.
Yeah, that's so beautiful. And actually, I heard that they allocated $15 million for one of the farmers project in India. So that's great. And also they have a lot of volunteers, those who are supporting them as well. That's a great culture in the organization. And now about Nanban Realty Fund, actually they have acquired, almost they are ready to acquire that Nanban Laurel Woody. And then now it is, Austin has really, really, everybody, knows Austin now because of various reasons, obvious reasons. And that has really generated a lot of interest. So this is going to be probably closed around May 10th. And if your money cannot get in by Monday, then it will be accounted from May 10th actually. So that means you will have time for another 2 weeks or 3 weeks for you to send the money. So that is already 50% subscribed. And so, all right. So here, this one is a 2006 built Class B property. And sometimes, Class A, Class B, after 2000, it could be closer to, when they say B plus, with the certain, when they're going to spend about $1 million in the capex budget, probably it might look like a Class A as well. And it is 74 units, 384 beds, because I think we get paid by the bed. And yeah, $8.27 average rent. It is a student housing. And so it is pretty close to the campus. Probably it is walkable distance. And it has the opportunities. It is about $260 per bed below the market rent for this kind of a quality. And the purchase price is $36 million, and they're taking only 75% loan, which means they are not leveraging too much. That is a good thing. And entry cap rate is 4.6, and capex budget is $1 million. That's what they are going to spend, about $1 million to renovate, so that they will be able to increase the rent and the net operating income to be able to make the profit. Whatever is the projected returns, which is conservative. And the raised equity is going to be $10 million. And we got interest only loan for 5 years. So that means there is more cash flow. And now Suresh Bachu.
Yeah, actually, let me just briefly talk about this UT Austin. Again, UT Austin is one of the like a top, highly rated schools in the nation. In fact, my son actually is doing actually a sophomore in undergrad. and he is actually living not far from this particular apartment. Therefore, that's because I go often. I know this road, the road, every street of that one, which is kind of right across the campus and everything, right? Therefore, this particular property is actually exceedingly really good value add property. Why? Though it is a 2006, we say it's a B plus because of the interiors. Actually, they are still dated. Therefore, whereas the surrounding properties actually are either newly getting built or demolishing like the one and building a high rise and everything. Those are the opportunities that we want. And the owner is actually out of state owner. Therefore, they haven't really kept up to the latest one. In fact, we are going to be working with a local management company. In fact, we already collaborating with the existing property management and building some synergy, and also building some way how to improve on everything. Typically, one best part about the schooling, any student housing is usually typically the pre-lease starts anywhere between from like September of the previous year for the next year. And usually it's always going to be 1 year, and it's always guaranteed by their parents. As you all know, because we all as parents, we have to somewhere or other actually have to pay for the rent, whether whatever it is. Therefore, those are the advantage from a owner's perspective. When I see it, actually it's going to be a good. And again, the location, not to mention about how much of influx is happening from West, from California. As you know, HP is moving and Tesla is building the new factory, and a lot of expansion is happening in Austin. As it continues to do that, obviously UT Austin is actually growing as well. To just to put into perspective how busy the overall surrounding accommodations and everything, because even for the freshmen, they don't have enough dorm capacity. Therefore, that puts into the numbers actually wise how much of private accommodations actually is going to be going as well. And again, it's the fastest growing largest metro in the US for 9 years, and it's not stopping, right? Therefore, it's going to grow even more as well. And overall, 2.2 million. In fact, I myself used to live in Austin about 8 to 10 years back. I mean, looking back now, how much the city has grown, and it's continued to grow and expand as well. And even Austin is obviously, as you know, it's the fourth largest in Texas, and it's outpacing the growth wise every other city. And job growth, of course, not to mention IT is like Silicon Valley, right? Next to the Silicon Valley, the overall IT employment and the job growth and everything is growing. And every high tech company has a presence here, and it's continued to grow as well. Google, Apple, and Tesla, and every company, or in fact, Oracle actually moving their most of their operations into this as well. Therefore, as you see every other day, the new move that we are seeing as well.
Yeah, I think all of you guys really know what's happening in Austin. That's why, most of you are here, I know. And so now these are the pictures. Go ahead, Suresh. Have you?
Yeah, as you see, the interiors are, as you see, the dated, the black appliances and everything, and no backsplash and everything. Therefore, those are the things that we are going to do. In fact, my son was telling me, because he happened to see this property. He said it's obviously not up to the level of the other properties. There, the properties actually is actually, in fact, we mentioned about $200. He says actually almost 1,200 to 1,250. Also, there are apartments which are actually updated as well. Therefore, we are not concerned, we are not looking at that much. At least we are looking at about $200 that we can confidently that we can achieve in the next 12 to 18 months. And there are various plans, of course, as you know, everything is actually charged per the bed. Therefore, though it is actually 74 units, we have 384 beds. There are some beds we have independently attached bathroom and everything, and also some are the shared accommodation. Depending on whatever their preference based on the cost and everything, we have options to cater to everyone. And as you see here right now, average market rent is just about $820, whereas we know you can easily get like 1,050 to 200, 1,100 in a time once we start updating and everything. And the pre-leasing has already been improved as we started working with our property management by almost 15%. And of course, the last year has been, because of the COVID and everything, not many students are actually living on the campus. That's the reason the pre-leasing has been slow. But now that actually things are moving and vaccine is happening, therefore we are very confident this year by the time college starts, we'll have stabilized occupancy. And as you see, he's like right across the campus, just walking distance, the property as well. And another aerial view, as you see, a lot of busy employment and everything is growing. It's all about location, therefore there's nothing better location than Austin, especially the downtown, right across the campus. And just to give you an example, actually, see there are other properties nearby, how they are performing about the same vintage, similar age properties, except that they are all updated. That's the reason they are able to achieve higher rent per bed. That is what we are going to be targeting in the next few months as we start doing it. And this is actually important. Actually, I just wanted to show, like as I mentioning, actually saying that okay, we always project all our returns, and as Velu mentioned, it's going to be most likely that we are very confident of exceeding. But what we are going to be showing is very conservative of this one, 18+% that we are going to be projecting. And as you see here, our focus is actually not really increasing the rent, but rather just increase the occupancy and do that. And towards the end of this year, as we start moving, then we want to start upgrading as well. We are partnering with a very good experienced operator right now, the property management company, who are very specialized in occupied renovation, because you don't want to be waiting, because in a student community is usually, except for the summer, usually not the properties are vacant. Therefore, that's why we are going to be working with them to occupy renovate while tenant is living. That means you don't have any downtime, rather just take the advantage of that time and start upgrading. And as we start moving to the next year, you will realize the rental upgrade. And the next 2 years, that's what we are going to be planning. That means achieving about 6% to 5%. In fact, as such, Austin normal organic growth is about 4 to 5%. Therefore, we are going to be very confident about doing that. And right now, based on that, actually our current cap rate is 4.6, and our reversion cap rate means the cap rate at which we want to sell to achieve these returns are actually about low 5 cap. But it's in Austin, it's never going to be that. It's going to be low compressed caps, like around low mid 4%. By then, we may even exceed the returns by double digit more as well. And as you see, break-even occupancy, very healthy break-even occupancy. As Belu said, we are only leveraging 75% with an interest only of 5 years. That means our debt ratio is also good. Therefore, break-even occupancy for everything is starting at 82. As we continue to improve our bottom line, the break-even occupancy also goes down as well.
Good. There are some frequently asked questions, right? But of course, we will address all your Q&A, and I don't have access once we finish it. So basically, like this particular slide deck is going to be available in the portal. So you will be able to access this information as well. So now, so if you are ready to invest in this particular deal, you can go to teamvalue.inv portal, that is investors portal, right? INV is investors, invportal.com, or t.ly/7 capital U, capital O, capital P. Or you can send, of course, an email to me, velu@teamvalue.com, or people, those who had not had a chance to meet with me, you can schedule a meeting with me at calendly.com/teamvelu as well. And so once you register into the portal, I need to verify you because there is an SEC rule that they need to be a verified user to be able to access these deals. And you need to be an accredited investor or a sophisticated investor to be able to invest. So that's about how to invest, and take a screenshot if you'd like. And let me also share this information on the chat soon. So once you get into the investor portal, you will sign into this, and then you need to be an accredited investor or a sophisticated investor. Then you fill out the subscription forms, and you can review and sign there online itself, and immediately you will be given the how to wire your funds, and you can email that information to yourself, and then we will give you the confirmation with uh, the manager of the fund countersigning as an executed document. And of course, as and when the financial statements are available, that will be published into the portal. So that is a disclaimer. And now it's basically, if you have any questions, it is velu@teamvelu.com, and it is 972-754-5027. We're going to open it up for a Q&A, and please raise your hand and I'll be able to unmute you. So stop share, and Suresh, if you are available, you can come on the camera, but otherwise that's okay. Let me see. So participants, Kasi Aragapan. Okay, go ahead.
Oh, hi. I also typed in the chat window. First of all, it's a good presentation. I lived actually in Austin. I also studied at UT Austin, so I'm familiar with the area. I've been to West Campus, North Campus, and all. So one question is, while I know that primarily the West Campus area is primarily targeted by student living, now that Austin, there are a lot of offices are also coming to downtown. So is the apartment community will be appealing enough to young professionals working close by? And at the same time, did the pandemic affect the occupancy rate of the students in the last year?
The occupancy is not affected because most of the times, as you know, the occupancy is actually it was already pre-leased in the previous year. Therefore, occupancy was not an issue. But the only challenge that would be right now, the current property management and the current owner is not able to pre-lease in the last year itself. That was the case usually. That was the only thing. Apart from that, actually, it's never had any occupancy issues or anything like that.
And then
I go about the young professionals. Of course, this property is well maintained and everything. Of course, as I mentioned, of course, interior updates actually not to the recent levels. Therefore, it is still a little dated, but otherwise, all the amenities and the property and everything is good. Now we are going to go and take the opportunity and then start working on the interior renovations.
So that kind of opens up broader, I guess, demographics, right?
Correct. Exactly. Yes. Yeah. That's right. Yeah.
Thank you.
Okay. Next is let's answer some of the questions from the Q&A. And can you tell us who the property manager is?
And the property manager actually is going to be United Apartments Group, but we have other alternatives as well. We are going to be working with one of the either UAG or another property that we are evaluating.
Okay, good. And where are the 4 properties for the fund located?
Okay, the fund right now only has 2 properties, as I mentioned. This is the first fund, and the first property that we are closing next week is in the Houston, which is the Woodlands area. The other second property is the Austin RIO, and of course we will evaluating, and we will have few more properties lined up by the end of this year. Therefore, plan is actually, as we mentioned, is going to be at least about 100 million overall acquisition size. We are already almost 90 million here with these two properties. We may want to do at least one more property to meet our this one, and if the time permits, we may acquire one more. By the end of this year, whatever the properties that we acquire is going to be under this fund.
So 401k, can they use the self-directed IRA funds? Yes, you can. And another question is, are Nanban Group's stock market and real estate separate entity? Will a loss or profit in stock market group reflect in real estate and vice versa? It is a no, but I will let Suresh say that.
Yeah, basically, those are two separate entities. In fact, Nanban as such, this one has a foundation by itself, which is basically a free teaching or charitable and everything. Apart from that, we have Nanban Investments. That's a separate entity by itself, everything separate. And similarly, Nanban Reality, this is another one. And we will soon be launching venture capital as well. But again, each one works and independently. Therefore, no impact of stock market on reality as well, because this is purely for the purpose of acquiring and managing and real estate. That's this particular one. Yeah.
How often do you plan to meet with the investors? We will not be meeting with the investors. We'll be sending a quarterly report, and unless otherwise major decision, which is not usual, it has to be taken, only then investors will be contacted. Otherwise, you will have access to me, and you will shoot any questions to me, and I will be able to answer. And then the next one is, how many years current owner had this property? What is the rate of return the current owner will be getting by selling this property? We may not know this information, but again, like every 5 years, people, at least all the deal sponsors, that is the model we have. We have a budget of $1 million to increase the rent, right? So we do a renovation of $1 million to increase the rent. So again, we will not have another $1 million for going for another cycle. So we exit, and then next person picks it up. As Suresh said, we are looking at only increasing it $200, but whereas there is a potential to increase $400. So that piece is given to the next person, and they will pick it up, and then they will buy it. It will become attractive for them to buy it from us as well. So that is the cycle. And how is the pre-leasing looking like for the next school year? And actually, because of all the vaccines happening and all that, the economy is already coming back pretty fast. And is there any other data point you have, Suresh?
Yeah, we are closing almost like 75 to 80%. We are very confident that we will be at the full capacity by then. Yeah.
Awesome. What are some of the scenarios where LPs could lose their investments in this type of multifamily investment?
I mean, again, let me ask you a question, right? The same on the topic. For example, every investment has a risk. That's the inherent risk, whether it's a stock market, whatever it is. But again, when you are buying a real estate, it's completely losing everything. It's very, very rare, right? It's not possible, right? For example, if you buy a single family home today, there may be valuation fluctuate or anything like that based on the economy and everything. But again, you never lose, the LPs will never lose the entire money or anything. To get the projected returns, instead of 5 years, it may take long in case of something like a pandemic or anything that happens. But otherwise, we are like, your investment is well protected.
Yeah, sure. So basically, the risk is if the general partners like us, if we are not experienced, if you are not reliable or dependable, then you have an issue. So that is a major issue. So because we have been able to, they have a track record, and that is where we have, and also they have a team of members and all that, and they have been distributing a pretty good profit as well. And some basic questions: if you invest 50K before the end of March, so you will get a quarterly return in about 3 months' time, a preferred return of about 8%. Unless we make 8%, we won't take any money, right? So that including Nanban. And when does the first distribution start? I already said that. What if I want to bail out after 5 years lock period? There is nothing called bailing out, but yeah, usually this kind of investment you should be willing to wait until the property is sold and then distributed, and that is what the sophisticated investors and accredited investors are being qualified for according to SEC. But in this particular one, they are saying that yeah, we will allow you to transfer to another person if they are willing to buy it from you. Usually that's not the case. How many GPs are there in the investment? Basically, this is a huge Nanban investment fund. And so basically they are only partners. It's a big company. And I'm coming in as a fund of funds. Just to let you know, it is a little different model. It is not just one property, it is a multiple property. And then I have next a few more questions, and one more person has raised their hand. I will open it up. And what kind of renovation is planned for? I think you addressed it, Suresh, but still, I think appliances and what else? The backsplash.
The backsplash, and of course the technology package. And those are the ones actually that we will be doing. Mostly the interior renovations that we are going to be planning actually. Right. I mean, there are multiple exit options, but let's not go into other many things, but that's the, yeah.
So when you put in that $1 million into it, and then when you raise the standard of the property, naturally the students will be willing to pay more money because it becomes comparable to another property which is charging $1,200, right? So how far in miles is the property located from UT campus? I saw that it is 0.21, correct?
That's correct, exactly. It's just a walking distance.
Right. And then any reason why this has only 74% occupancy? It's obvious because of the COVID, right? So that probably would have been the opportunity for us to buy it as well. Is there anything else you want to say, Suresh?
No, that's a pre-leased actually 74, but otherwise the physical occupancy as of now it's 80+%, but which we know because of the COVID situation, that was the case. Actually, some of them left, and but now, of course, things are moving, and a lot of inquiries are happening because students are moving back. Now it will be next couple of months we'll have the full occupancy again, stable occupancy.
Okay, very nice. And I'm going to give Andrea Paul. Please go ahead and shoot your question. Hey, Andrea.
Hey, Velu, I didn't ask a question.
Oh, okay. So I thought you raised your hand. That's okay, not a problem. And thank you for attending, and appreciate you. Are there any other last minute questions? Please go ahead. All right. So thank you all very much. And I have put it in the chat how to really invest in this fund. And whoever has registered, you are going to get the recording for this one, as well as once you, actually I accidentally raised my hand, sorry. So the recording will be available to you automatically from Zoom. It is going to be sent out tomorrow. And other than that, once you log into the teamvelu.invportal.com, you will be able to see the deck as well. And not only this one, but also you will have access to the previous seminar, Laurelwood in Houston. So that is also going to be there because both of them are a part of this fund, and that deck is also available. And so now I hear that I see that there are 2 more participants raising the hand. Just give me a second. Bala Swaminathan. Okay. All right, Bala. Welcome. Go ahead.
Yeah, hi. Yeah.
Hi, Bala. Yeah.
I have a couple of questions, actually. I actually raised the hand and also put the questions in the Q&A. The first question is, at the end of the project, I assume you dispose of the real estate holdings. And the VAT, and how much are the transaction costs and the capital gains or losses over and above the capex that you are planning to spend accounted in the projections? I guess they are, but I probably missed it.
Correct. Yeah, everything is accounted. Whatever the projections that we have is basically based on all the cost and everything.
And which
Therefore,
row is that? The one that says not that one that's servicing the debt. But the one above that is which one that actually accounts for these costs?
okay. Therefore, basically there will be overall cost, right? Therefore, operations cost and everything we include everything what we
I
have
see.
and everything. Yeah, that's
I see.
part
Okay.
of the operating cost and everything. Yeah,
And
but what the reason overall returns that we project is basically after taking into consideration of all the cost and everything.
Okay. And Raman sir was talking about 8% at the end of the June for March investors or any investors at the end of the quarter. I assume it's an annualized 8%. In other words, it's 2% for the quarter.
True,
Right?
true, true.
That's correct. Yeah,
Okay. Otherwise, it looks wild. Okay.
Thank you for the
Yes, it's annualized. Okay.
appreciate.
And what happens if there is no there's nothing mentioned so far, at least I didn't hear it. What if there is a capital gain at the end? Is that going to be distributed at 75-25 as well?
that's correct. Yeah, that's how, because what happens is actually as we are projecting 8 to 10% is the quarterly returns annualized, which is basically we are talking about, let's assuming it's a 5 years, even if it a 9 or 10% average is about 45 to 50%, which makes up only half of the overall returns. And the capital gains what you get is actually is going to be the one which makes up to close to 2x, which is going to be another 50% is going to be at exit.
Okay, that is all. Okay, that will also be distributed. That will be distributed at the end of the project duration.
Right.
I mean, let me this one, right? Not just only at the end of the, because it is a fund that you are investing, there may be multiple assets that we are acquiring. Not necessarily that we are going to hold on and sell all the assets at the same time. Therefore, it could happen, as I mentioned, overall our annualized projected returns meet our criteria. We may be exiting after 2 or 3 years as well. Therefore, as we exit the assets under the portfolio, we continue to send the returns back to the investor.
Capital
Just want to
distribution
make it
will
clear.
happen.
Yeah.
So what Suresh is saying, even though we project 100% return in 5 years, if the property, okay, we raised $200 and there is $200 more which can raise, somebody is willing to buy it at $10 million more, then they will sell it and we will get the profit just much earlier. That means the percentage of return is going to be even more. So that is one. And another thing is the first year you're going to get about 70% the depreciation, which, if you invest $100,000, $70,000 approximately, plus or minus, can be a depreciation which you can use for your tax returns. So you don't have to pay taxes on $70,000 of your income. But you have to consult your CPA, if you're eligible and things like that.
Understood.
There could be some eligibilities. So are there any other questions, Bala? It was
Thank you.
Yeah, thank you, sir.
Thank you.
And there is another question about how much is asset management fees, acquisition fees, and property management fees?
Yeah, it's a property management is actually industry standard 3%. Asset management is again 2%. Acquisition is 2%.
Okay, that's good. So acquisition is there, or?
Yeah, there is a 2% acquisition thing.
Okay, all right. So that was your last question. Those are all pretty standard. Everybody is using those numbers. So thank you all very much. I really appreciate your time this evening. Hope you received some valuable insights into this investment. And you're welcome to schedule a time with me or call me, text me, or go into the portal and then review even more. And the portal has got a lot more opportunities as well. And really, really looking forward to work with you guys. And we are committed to helping you become financially independent sooner, so that we all can live our life to the best and squeeze the best out of our life. Thank you all very much. Good night. and see you all soon. Bye-bye.
Thank you.